If you've been trying to buy and sell stock or single option contracts in order to make money from trading, but you haven't done covered calls trading yet, I want to show you how the process of recurring revenue comes in when you're selling covered calls against your stock. Now, if you don't know me, I'm Sasha, the options coach, and I've been teaching people to trade options over the last decade. So in this video, I'm going to break down a few minutes of how money is made when you sell covered calls against your stock and show you how you can make a recurring revenue in a similar fashion as you might go into buying a home, renting it out and making consistent income from there and selling it later for appreciation. So before we get to the option side or how money is made on the stock market, I want to show you this quick little example as far as a real life scenario of how this works in terms of, call it, the real world. So in the real world, what we do is if we're trying to buy a home, what we're doing is we're buying a home and we're looking for it to increase value over the next, let's say, 5-year period. And if we buy that home for, let's call it $500,000, at a certain point, it might increase, it might wiggle in price, and eventually we get to a $600,000 mark, and we might decide to sell that home. So all of a sudden, we've profited about $100,000 from that house. Now, in the meantime, during that 5-year period, we're making rental income. So what you have is also money generated from year 1, year 2, year 3, year 4, year 5. That money is made time and time again. So every single month, as that house is sitting there, you're driving some revenue. Now, of course, there's expenses for maybe AC maintenance and other things, but what you're doing is you're bringing in some revenue. We'll just call it $20,000 a year just to make numbers simple. So every single year, you're bringing in $20,000, $20,000, $20,000. Now, in some cases, those years, that house actually might be below your purchase price. So if we look at kind of over here in this time frame, it's a little under. But what you have to realize and recognize is that every time you're still collecting rental income. So if we've got 20, 40, 60, 80, another $100,000 coming in just from rental income. So what ends up happening is that you end up making $200,000 in profit just for the ownership of the house from buying it and selling it and from also renting it out. $100,000 come from the value appreciation and $100,000 comes from the rental income. And if you're doing covered calls, it's not much different. The way that it works and operates is that we go in and the first thing that we do is we pick a stock. So let's say I choose something like Microsoft. So it's going to be MSFT will be the ticker symbol. We buy Microsoft. We'll buy 100 shares. So that's going to cost me something. Okay. And then what we do is once we buy those shares, we will sell a call against it. Now, what selling a call means is that you are willing to pre-sell that stock at a certain price. So let's say you buy Microsoft at $400 a share. Well, now you're willing to say, okay, well, if it gets to 410, I'm willing to sell it for 410. Okay. Now you're kind of pre-selling it. And by pre-selling it, they pay you a certain amount for kind of like a holding fee or a finder's fee, you could say. So what you're getting is maybe another $300. So not only do you get these 100 shares to move up $10, so that's $1,000, but you also get that rental income of $300. So what you can end up doing is that with time, if you have these shares, you go in and like, okay, this week I make $300. Next week, another $200. Next week, another $200. So you can recurringly keep putting on these call positions to sell your stock at a higher value and price. And you might say, well, why would you do that? Why would you want to lose the stock? Well, in the same way that you would want to lose your house later on to sell it, because what you end up doing is buying another property and then you sell it again and repeat the process. And that's what we do here is eventually you will lose those shares or that stock because it gets to a higher price and then you end up losing it. So in order to do this, you can do it kind of on a platform here. And just to show you a general example, here's Microsoft. We can go in and let's say we bought these shares and we bought 100 shares here. Okay. So once we had 100 shares, then what we can go in is go about 16 days out and we can say, okay, well, I'll buy the stock at about 417. Let's say I get rid of it at 420. We can go 16 days out. In this case, it'd be October 25th. And I'll say, I'll sell it at 420. And that would collect me or yield me about $800. It says $8, but because we do it in lots of 100, that's $800. So I'd make money from 417 to 420. That's about $300. plus the 800. So there you're looking at, if we look at our graph or diagram, about $1,000 when all things are said and done. Okay, at expiration, of course. So if that stock heads higher, you make about $1,000. So that's how things work when it comes to running and operating kind of a trading business. Is that you're really looking at the same way that a real estate would. You're getting things and you're buying it at a certain value, and then you're selling it later on at a higher value. And in the meantime, you're also collecting rental income time and time again. And with a stock, we can do the same thing. We buy it, we sell a call against it, and eventually if the stock price hits that higher price, we have to sell the stock and get rid of it, and all things are then settled, and we move on to the next transaction or a different stock or a different ticker, or we repeat the process. So anyways, hope this video helps and gives you a little insight to trading, how covered calls allows you to make money on a recurring basis. And it's a lot better than buying single stocks or single options here and there for a lot of people when you're just brand new and starting out. Thank you so much for joining me, and maybe I'll see you in the next video.